Brad, how do you determine your stop-loss uncle point when the market inevitably does not agree with your analysis? That's a good question. I tend to have a pretty defined risk on every trade that I do. So in other words, I think one of the biggest problems that people fall into, and this is professionals as well, is that they really don't understand the contract size and what you're doing. I mean, the fact is, it's a very levered game in the futures markets, and you need to be careful when you're taking positions that you can wake up and if the market's 2.5% against you, it went way through your mental stop. So really the way that I do it is I've got my idea based on typically based on a chart scenario. So in other words, if I'm looking for a 3-week rally, right now my out point is 1185 in the futures on my long positions. So now what I need to do is assume that they're going to go to 1185, and then I'm going to need to factor in how much money I want to lose at 1185. And that has to be the determining factor in how many contracts I put on. And it's pretty much that simple. I tend not to think of what I can make. I always think of what I can lose. And that's how I determine it.